There's a couple of things I'd like to go over in this video. I'm going to look at some of the trades I took on gold just today on Monday, the 23rd of Feb. Yep. Executed a couple of them quite poorly, but mainly because I wasn't sure what I was looking for in this area on some prop accounts. Ended up catching a few wins over this side, which made up for it for the most part. And there were a couple of really key themes that I want to dial in a bit with. At the same time, I also want to talk about crypto a little bit, about Ethereum. I just found this news article when I was looking at the Ethereum charts, and it just stands out because it's a very bearish news article. And from my observation, a lot of the time when there's an asset that's clearly accumulating or likely accumulating, a lot of these bearish kind of insider trading articles will come out. Of this one being the co-founder of Ethereum selling a bunch of Ethereum. And I mean, 9,000 Ethereum for him, they'll be absolute pennies. But when you get all these news articles popping up, like outflows of crypto funds and BMNR saying, yeah, Bitmine paper loss nears 8.8 billion as Ether slumps. Like there are all these bearish news articles, which I find really interesting. And at the moment where we're at, like it is in a interesting spot because this is the first pause since we had that nice sell-off. I've made some videos in the past already talking about why I'm extremely interested in this area right now, but mainly we're respecting a really key level, and we're below a major sell-side pull, which had a major news catalyst here as well. Clear previous area of accumulation, taking out all these old lows. And then the main reason why I'm very bullish on Ethereum at the moment is just looking at this ETHBTC chart. You doesn't have the price action over the left, but even just looking at this, you can see a lot of reason as to how we could have a very aggressive squeeze up into these highs. And if that is the case, then that just means Ethereum is outperforming Bitcoin, which can mean bullish or bearish, but with the amount of movement that would enlist, it is more likely that it's going to be a bullish market regime. My entry as well, like right here is where I wanted to buy. So I've been buying Ethereum, shorting Bitcoin against it, but I've been buying more Ethereum than the short of Bitcoin. Bitcoin is just more of a hedge, and expecting this to have quite an aggressive move back up, in which case I will add more to my position. But at the moment, as you can see, it's kind of just had this aggressive sell-off. There are major sell-side pulls down here, but we did previously accumulate in this area. The thing that I don't quite like just yet is the fact we have these very long wicks to the downside. A lot of the time, how I see it is that retail sees a bullish rejection. So they see a very long wick, they're like, well, that's very strong. I'm going to put my stop right at that low. Which means that a lot of the time I look to overlap that. That's why I actually was short XRP from this area here, attacking this long wick, because we have the same situation where this quotation mark bullish rejection and price just drifts into it, and then we have this enticing rally higher, and then an aggressive break back down, just showing that heaviness, and it just melts into this wick. So potential that this happens over here as well on Bitcoin and Ethereum. But I also want to be accumulating because the sentiment at the moment is overwhelmingly bearish. As I just showed you, looking at the news, like Bitcoin and Ethereum, just very bearish news. And if you go on social media, the only thing people were talking about, no one's talking about a bottom here. Everyone says, oh yeah, it'll be 50K or 30K on Bitcoin. Everyone's talking about how it's going to go lower, which, although I don't know if this is the low or not, it makes me more inclined to want to buy in this area. And in saying that, I have got a very wide stop loss at the moment, I'm basically sizing so that if price comes down to here, I won't be liquidated. Well, yeah, so basically putting my stop down there, but also in a way trading without a stop and just funding my account as it goes with just using my weekly paycheck essentially. But I just want to be accumulating a position down here because we're in a previous era of accumulation at a deep discount. It's like we're over 60% down from the highs. And the Ethereum Bitcoin charts ratio chart is showing that structure that I look for. That is one of my key setups, and it's holding so far. I can show my trades currently. Since we're doing this Ethereum Bitcoin thing at the moment, I just have to remove a expert advisor. Remove. It auto adds stop losses and take profits using the ATR, but I don't want that to happen right now because I'll be going on to my personal accounts where. So this is Ethereum right here. You can see in a bit of drawdown at the moment, but I've been accumulating for quite a while. This initial entry is quite high up. However, that was when we had Ethereum Bitcoin dropping right into this area here. And as you can see, we haven't really been drifting low on Ethereum Bitcoin. And because that was my entry that I wanted to take on this chart, I bought Ethereum and I sold Bitcoin at that moment, despite still being bearish on crypto, which is perfectly fine because the Bitcoin acted as a hedge, which you can see over here, it's up quite a bit. But at the same time, because I was more bullish than bearish, I opted to size a little bit more heavy on the Ethereum side of things, even up here. So I bought 4, despite being at the best ratio for this to have been break even the whole way down would have been 3.3 Ethereum to 0.01 Bitcoin short. I bought 0.4 Ethereum, which meant that I actually lost $100 just for no reason at all, except just making a silly mistake. But yeah, down in this area, anything below this low, this old, you can see there are multiple tests. I don't know if you can see my mouse or not, but multiple tests of the same level at around 2,100. We've got below that, and we've just been consolidating below that, which I really like. It's like we're enticing traders to see this as support turned resistance. So we'll draw a box out on it and see that we've dropped below this level, and now just working our way down in that range. So I do like the longs from this area. I like the fact that everyone thinks it's going lower, and we're now getting this sell-off. And this daily candle closes in 40 seconds. But with this sell-off, what I'm thinking is there a reason for us to rip straight back up? Of course, it would be nice to see if we can take out that previous weekly wick. But at the same time, if we fail to do so, that is really telling as well. And right now, we're closing this daily candle, selling nice and deep off into the range, while everyone is expecting us to do so. And I'm kind of curious if we are able to get a long opportunity in this area. I was actually long last night during the kind of London session, Asia into London. Caught a nice long on XRP and Ethereum, and took one partial on XRP, and then the remainder 50% came back and stopped me out. I'll have a quick look a bit lower time frames, see if I can see anything. Like honestly, you could probably just buy it and it goes up, but that's why I'm using like this wide stop loss at the moment on this chart, because like it's in a very key area to accumulate positions. I know large institutions will be accumulating in this area, but I'm not confident enough in this low to be putting tight stop losses just yet. And when I will be, how I'll do it is I'll wait for this chart, which is the ETHBTC chart I mentioned. Once this starts showing me the signatures I need to see, which will be essentially a strong displacement up like that, Then I will drill down to the lower time frames on Ethereum and I'll start getting those tighter entries. The trade I took last night, I might as well jump over that real quick, was a fairly clean trade. We had this aggressive sell-off, been consolidating at a nice steep discount of this range, and then started pushing up towards the highs. Now, as we're pushing up towards the highs, I was looking at both Bitcoin and Ethereum and XRP. See, I've got a few things marked out, but I was looking at this swing point. On the 15 minutes time frame, this is a very nice, obvious swing point, aggressive sell-off, and using my squeeze reversal model, I noticed we'd failed to take out the lows and then had this displacement up towards that high. You can see I've measured out this midpoint here. I was basically just waiting for a closure beyond the midpoint, which happened right here. That indicated we were likely to continue to this next high, which we did before I got an entry. But we also got this displacement above the midpoint of this range from that high down to the low. We got multiple 5 minutes, or actually we got multiple, I think even 1 hour candles closures above this level. That indicates that the impulse origin should remain intact and we are likely to continue to squeeze up to that obvious buy side liquidity pool. So I bought as we dropped back into this range and caught that run up there. Taking a partial as we hit these highs up in this area with the idea that we could easily hit 420, which we did. And then held my runner, which stopped me out at break even. I can show those executions real quick. BUSD. So buying 1000 there, holding up until this high, just up in this area, these red equal highs. Expecting, ultimately, I wanted to see us squeeze out this daily high. If we look on the daily time frame, very long, so massive sell-off, and then a very long wick engineered where trailed stops will accumulate above this high. So I wanted to target that level. But yeah, eventually getting stopped out down here. I actually left my stop in place because I wasn't even risking that much. But I thought there was a good chance it could continue to rip up. Just didn't. And then if we look at ETH for Black Bull, these are the trades I took here. Buying one essentially in this area. I had my stop loss right below this low. And the idea was that this was a confirmed 5-minute order block. You can see we came really close to that low. We didn't actually take it out. And then got this nice run higher. Closed the partial out up here as we hit this short-term high. And then as we ran up into this high, took a bit more off. I actually woke up at 3 a.m. or in New Zealand time. And was watching the chart and I thought, okay, well, this is looking good. I think what I'd like to do is I'd like to take some off at 41.2. So essentially this impulse high up here. It never quite reached it and then just sold off overnight and stopped me out. And yeah, that is that. I would like to continue to watch it because I think, I don't know, we've got SMT down here. I don't know what the high time frames are looking like SMT wise. We have just tapped this deep discount and 10 range low. Bitcoin showing some relative weakness at the moment. If I was to long anything, I think XRP actually looks kind of the cleanest, but also I do like Ethereum. And if I can get some tighter entries on Ethereum, that'd be a nice way to do it as well. The way to do it, however, is to use a different account. So you can see I've got this account down here. I just loaded this up yesterday and used it for this particular trades. And that's because I want to keep it separate from this account over in this area. I did also add another 0.2 Ethereum to this account yesterday. And with this account here, like I'm basically just trying to add to it as I can. Keeping in mind, I've got these stop losses in place just so that I can calculate like how much am I actually risking on this trade at the moment, because I need to make sure my balance can cover it, which at the moment I've got 850 NZ dollars in there. I think if price was to come down here, my Bitcoin hedge would make me money, but my Ethereum would lose money, which I worked out would come to about a 1.8k New Zealand dollar loss, roughly. So I just need to make sure that if it does start selling off, I'm able to fund my accounts faster than it loses money, so that I don't get liquidated before the trade thesis is invalidated, which, yeah, I don't think it should get down to this area. That's kind of what I'm sizing for. I do really like the longs in this area, but yeah, at the same time, like I'm already relatively long. Suppose I could just assume it doesn't break the low and heads back up and just size for that. That could be a way to do it. Get kind of like a high time frame entry, but then actually manage the trade as I would otherwise. How I'd do it is I would, if I was to, I just measure out this low down to ERL, find the midpoint, and I'd assume that the midpoint between the midpoints, so the lower 25% of the range, price shouldn't really reach into that area. So if I was to put my stop loss down at around 766 and I bought, let's say I bought 3 down here, and put your stop loss down way down there. So I mean, like I could just put on a trade, just using the idea that this low won't get taken out, and that would purely be based on slightly riskier entry, because I don't actually know if we'll take out this low or not. But just the amount of sentiment on social media at the moment that everyone's just talking about, okay, we're going to make a new low, we're going to make a new low, price is going to sell off and make a new low. We just closed this bearish daily candle, and if it's not going to make a new low, there's a good chance it wants to reverse right from here. And I do like the XRP narrative as well, where we create this long wick, we roll over, sweep out this low, and it looks like it's rejecting up quite nicely already. I don't know why this one only has 2 hours left on this daily candle, whereas these ones, are they actually open and close at different times, it seems, which is interesting. Yeah, so Bitcoin appears to be opening at 1900, whereas the others are opening up at 1700, which I don't know if that is regular. Be to find out. Yeah, it appears to be. Not sure why. But I think I might actually just buy some here, because I can afford $30 of risk. And as soon and once it moves in a certain direction, I'll look to manage the trade and then potentially hold a runner. That will do for this for now. I'll set I've already got an alert actually for my point of interest, and I'll leave this here for now. I have 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 1.5 ETH long and 0.02 Bitcoin short, which if I put on, it might add a stop loss briefly. I might just do, okay, so this is risking, is that NZ or USD? It might actually be USD. No, I don't know. Let's test it. So this is 200. So if I add $200 risk, does this go to 900 or less. Oh, hold up, I need to zoom out a bit first. So from here, that stop loss is at negative 200 New Zealand. Drag that down to negative 400 New Zealand, and it just disappears. That's not good. Oh, because it's below zero. I see. Well, I'll do negative 300 then. Okay, I think that is in New Zealand dollars, I think. Let me just double check. I think so, yeah. Okay, so be 2.7k New Zealand dollars in risk on on Ethereum, and then if I open up Bitcoin and if I do open charts, and then if I just zoom out on the weekly and assume that if this was to be the case, if we did get stopped out in Ethereum, where would Bitcoin be at that moment? Bitcoin would likely be roughly down here, which would be let's say 450 for that position in profit, and then this position will be about 600 in profit, which means 650. So it'd be like $1,000 taken off of that. So if I was to lose, Bitcoin should win about $1,000. Ethereum will lose that much, which mean I'd be down 1.7k NZ or so. And at the moment, that is probably about what I can afford. But I mean, I get a paycheck every week, so feel like I should add a little bit more. There you go. There's our stop loss just pops into place. Do not want to TP. So yeah, risking about almost 2000 NZ at the moment on this particular trade thesis, and I'm perfectly okay with that. So yeah, jumping over to these other accounts now. Now these are goat funded trader that I've been trading, and the last 2 weeks, I'm not gonna lie, have been not that good. I've been very unclear on what I'm actually looking for, and it's impossible to be patient if you don't know what you're looking for, and that's was kind of what I worked out today was the problem. But if I bring up executions, zoom out a bit. So going from the top, this is a phase one 5k challenge 2-set pro. I took a few losses initially and then took a win later on in the session. The initial losses, a short in this area, not really knowing what I was looking for. And then I took a loss here. This should have been a win. I was actually looking to, I recognized a 3-drive pattern in this area just up here. I was looking to buy as we close above the midpoint of that 3rd drive, buy with a stop loss below that 3rd drive low, which you can see it dropped all the way down to, then just went below and stopped me out, and then rallied. But it's when this happened at the same time as a key signature, which is a manipulation closure, which I'll get to on the trading view chart. And I didn't get back in this account, but on another account, I actually scaled in aggressively when that happened. But then after all this happens, I then don't trade for a bit, come back in the kind of London session. Right here, it looks like we were having a bit of a reversal, so I got long. Took partial, tried to add back into the position, recognized that it was actually going lower, so got out again. So that was kind of like a break-even trade. We then created these lows. It wasn't looking 100%, but it also looked like it could work. So I tried a little entry, twice, and then ended up thinking, yeah, this isn't worth it. So very, very small size because I recognized that it just wasn't really it. So it didn't really need to take that at all. Sold off. This is actually a front side entry. I actually closed my laptop and walked away. I was actually riding my bike at the time. So I put a limit buy down at 5,122.5, assuming that it wouldn't it would remain likely above the 20s, which it did, and put a stop loss down at 13.5 even. So pretty tight stop, basically using institutional levels to define the range I wanted to buy at, which doesn't always work, but this particular time it did. So stop loss sitting down here, entry right there, which it perfectly hit. Took a partial as it ran up into the range. It just fell short of my take profit. And then it started reversing back up and then hit it going into the New York session while I was asleep. So the next account I'll look at is the phase one 25k account. This is the first 25k I've done with GFT. And if I find the trades I took, I might have actually even traded silver on this, which isn't ideal because the spread on silver on these prop firms is terrible. Where am I? Okay, here we go. Yeah, so this is silver right here. I got a key signature that actually helped me time my entry in gold. And I got in gold there, also bought some silver as well, thinking that silver was holding up a lot stronger than gold. Silver then rolls off and makes a new low, but then does rally more than gold after that. We're just a bit of an early entry on silver. And then if we look at gold, same place, very similar trades. But right here is where I was getting long on silver and also entering on gold, adding to the position as it's pulled back. But I assumed that it wouldn't take out this low. So once it started dropping down really deep into the range and closing beyond a certain point, I figured, okay, well, it's going to take out this low at least. And in that case, it's probably bearish because I didn't know what I was actually looking for. I wasn't specific at all. So as we were retracing into this previous era of accumulation where we had a clean 3Drive pattern and displacement higher, I actually flipped to bearish, got stopped out, and I did the exact same thing on this account, which is a phase 2 5k challenge, which I kind of want to not do damage to, and I want to pass it. Ended up having a negative $150 day on it. But this one I actually bought, I didn't catch that initial move, the early entry. I waited for this pullback and I figured, okay, it's looking really good now. I'm going to buy this pullback. Stopped out, flipped bearish, and got stopped out again. You see up here, I also tried getting in long in this area for that 3Drive failure breakout. And I got stopped out directly at that manipulation closure I mentioned right before it rips in my direction. Now, I did actually have a nice win on this trade here, and that was in the next account and also a competition account with Blackpool Markets. But you can see here, I've actually got, once I got stopped out on these other accounts, it's like, okay, too much drawdown. I'm not going to go any further with those. I do have this spare reserve account, however, which is just a regular 5k goats account. I got stopped out along with the other accounts initially on this manipulation closure, but then as it instantly reversed back up, I recognized, okay, well, if this is going to work, that is the reversal right there at that candle. So I can enter very aggressively with a stop loss right below that low. That worked out nicely, so I caught a nice win in this account and was actually positive in this account. And then lastly, on Blackpool Markets demo account, You can see I took the exact same trade. Once again, I did initially take a few stop outs down here, but then I saw the manipulation closure and below the third drive, and I scaled in aggressively into that position, took profits at the highs, added, and got stopped out right here. I'm also long on silver on this account. I bought down at the lows on this week, got stopped out, but then re-added down here again. And yeah, this account's up fairly nicely. I was wanting to add a bit more into the position, but as mentioned, these past few weeks, which was essentially this area in here, I wasn't doing that well at all. And I've got a lot of things to work on, so I wasn't really in the right headspace to be looking for low time frame entries. But looking to, yeah, ideally add into this position a bit in here. And this trade was based on the daily time frame. We had this strong closure above the midpoint of this range. That means that the impulse origin was likely to remain intact. There is no such impulse origin that you can see on the daily time frame, but if you go to the hourly, we can see the order block that sent us above the midpoint of that range, which is about here. That order block I expected to remain intact. So you can see I was buying in this area. Stop loss was simply down below this low, which, yeah, worked out quite nicely. But yeah, those are those trades. Now I'll go on a bit more detail into the gold long using the 3Drive. And I'll do a quick high time frame view on where we are at. Gold's kind of interesting because if you look at this range from this high down to this low, we've just been consolidating around the midpoint of the range, whereas silver, on the other hand, we'll bring up silver. Silver has been consolidating well below the midpoint. So silver's been a lot weaker, but it's also been accumulating at this deep discount of the range. Whereas gold is just consolidating at the midpoint, which I don't really like for a directional trade. So I would be more confident on the silver long simply because we've been spending this time at a discount, whereas gold has literally just been consolidating right at the midpoint, and I feel it's more likely to have some gyrations backwards and forwards. You can see I've got this 1 day wick marked out. Looks like it's exactly where we went to today, which is nice to see. So it's just the midpoint of this daily wick. Reaching up for that level. I've also got this marked out. This just represents the previous week high and the next pool of liquidity. I want to see us reach up to the midpoint and get a closure beyond the midpoint. If we can do that, then I'll have some confidence that we're likely to reach up for this next swing high. If not, then potentially sell back off. And there were some nice squeeze type conditions in this area. Beautiful smooth highs up through this range, including balancing all these imbalances on the way down, which gives room for a low resistance run into those highs when we do eventually do it. A few really key signatures as well that appeared on the way up, such as failure to break structure to the downside multiple times. That's indicative of a squeeze. Also having manipulation closures, such as right here, representing the genesis of a move. So this is the genesis, and then you begin looking for your structural your structural things after that to continue in that direction. Then this is today's price action, engineering that initial low, making a new high, pulling back, sweeping it out, and then just a tight consolidation going into the 9 a.m. open, which ran higher. And that's right, I was going to show you the actual trade, the 3Drive trade. You can see I've got a lot of boxes marked out here. I'll go through real quick and say what they are, why I marked them out. All this analysis was the analysis I did live and I lost by doing. But I recognized that 1900 had failed to take out the 1800 high and sold off. I thought, okay, there's potential that this could be a squeeze back to the lows. How I would know? One of the ways to know is that we will get a strong closure below the midpoint of the range, which we never got, but that's why I had that box marked out to mark out the midpoint of the 1800 candle open, 1800 candle, and the midpoint of that range. If we'd got multiple 5-minute candles closures below that, then I'd assume this high wouldn't get taken out. That, however, did not happen. We got 3 drives and started moving higher. We then got a closure by the midpoint here. Silver at the same time was showing bullishness. If I compare silver, which is why I took this entry, is that I got a very objective confirmation on silver for a continuation. Or did I? I got a confirmation on gold. So this closure on this candle was above the midpoint between these two swing points. That being, if I zoom in a bit, so swing higher down to the lower swing high that before making the low, we reverse back up. As soon as we get a closure above that midpoint, that indicates we're going to take out this high more than likely. At this moment right here, silver had just taken out the lows, so at S&P on the lows, and still had not reached this high. So that's why I jumped in long on silver right at this moment. Unfortunately, the spread on GOAT fronted trader was like that much. So I ended up getting a terrible entry. But it did play out. However, gold then runs up into these highs. You can see that we failed to get to the midpoint between these two swing points and then begin breaking back down. Now, initially I thought, okay, this is going to continue pushing higher because we have a reversal. We have 3 drives into the midpoint of the range, reversal back up, short-term low, intermediate, displacement. So I was looking for a second stage and a run up into the highs. While this is happening, it begins looking not so healthy and dropping lower. It fails to trade into this gap, which was a very bearish signature. Then you can see I've got this marked out here. It's just the midpoint between those two swing points. We get a closure below it right there. At the moment, it's like, cool, it's going for this low. I thought that low would remain intact, so I'm just going to close it. And then my brain goes, well, maybe it is a squeeze reversal after all. And if I scale in short here and displaces lower, then I'll have a really good entry and I'll be able to scale into my position. So not really knowing what I'm looking for. And so I wasn't able to be patient. Like, oh, is it a long? Is it a short? Oh, I can argue both ways. And then I scaled into the short, hits the low as I expected, leaves this long wick. I'm like, okay, it looks bearish. And then it just starts calling back up. And at this point, it started getting obvious that, yeah, that looks like it's just going to keep on rolling higher. Very high resistance, rolls up into the highs as silver reverses down here. Now, what was interesting on silver is that if we zoom way out, we might not be able to, but this is the previous week high. Let's do this. Here we go. Previous week high is this level right here. And if we now drop straight down to the 1 minute time frame and look at that previous week high, you see that that is the low that we initially pulled back and made. So this is that same area on silver. We had pulled back and made a low, a perfect retest of the previous week high, creating that idea of support and resistance. We then rally above it and then sell off back below it. Now everyone who's looking to buy on that old support, they're now getting stopped out. We've now got this resistance idea being played out, and traders will be looking to get short off of that. That's happening at the same time as we're getting that SMT on the lows, which resulted in this beautiful push high on silver. At the same time as gold has dropped into this previous area of accumulation. I say that because we had a clear 1, 2, 3 drives into the lows, a nice bearish bullish order block. We drop perfectly into that bullish order block below this impulse low, and then just spend plenty of time down there accumulating before moving higher. Now to get to the fails, the PO3, sorry, the 3Drive failure framework. Now, what stood out to me about this and why I really actually like this trade is one, very aggressive sell-off. And then when we head back up, it isn't going up, down, up, down, up, down, like working its way higher. It's a very steady, consistent, one-directional grind. Sure, we had this initial rally high and sell-off, but after that, where are the stops going to be? Well, we're going to have traders who have their stops at the high, and we're going to have traders who have their stop at this high. When price is pulling back, we have traders such as myself trying to go short. And traders trying to go short here, traders trying to go short. You know, if they see this rally up and this sell off, like cool, lower high, lower high, lower high, I'm going to sell here. And it might put this up there, they might put it there, might put it up here. When this is the case, and you see this type of price action where it's a very steady, painful grind up against anyone who is short, a very, very steady grind, hardly any pullback, not really giving any chance for anyone who is short to mitigate their position. And anyone who's shorting on the way up, they're basically underwater the entire time. Maybe briefly they get into the green and then straight back into the red. That is the kind of price action I like to see for this particular framework. And this framework I call the twist and rip. The idea is that you're twisting the knife on the way up, and then when you get to the top, you're just going to rip. And that is what we get here. Very steady grind higher. We know that we've got people short up here, short up here. Maybe they decide to move their stop a little bit higher up. But we're then consolidating below this high. I'm trusting that we're unlikely to break these lows and we're likely to rip higher. I don't know what this box is actually. I was measuring out this actually, this range. But what I saw on here, you can probably see it better on the 15 seconds time frame, is a 3-drive pattern. Now see if you can see it, but I'll point it out. We have 1 drive, 2 drives, and 3 drives. I'll make them visible on the lower time frames. But nice 1 drive, 2 drives, it sells off, makes a 3rd drive and breaks down. If you're bearish, you'd want to see this hold price below it. You'd also be wanting to see the midpoint of this 3rd drive hold price below it. So if we measure out this 3rd drive, you can see that we have the midpoint here. You don't really want to see us get above that. The same as over here. If we look at this 3rd drive, so we've got the same thing, 1 drive, 2 drives, 3 drives. Measure out that 3rd drive. You want to see price remain above the midpoint, which we do the entire time. When 3 drives fail, they usually fail very nicely, very spectacularly. And in this particular instance, you can see we get above the midpoint. We don't break the high just yet, but we do sell back off. Now you want to see that low end of that range respected, which is not what happens right here with this closure of this candle. A closure below a level that should be respected. That is bearish unless the very next candle instantly reverses, and that's what we get here. 21.24 reverses back up instantly. That becomes a manipulation closure, which is an incredibly powerful signature. And that's why I was buying in this area with a stop loss below that low. I got initially stopped out quite badly right here. And that's because I wasn't specific of where I was putting my stop. But I think in a 3-drive failure type of setup, initially you want to have your stop loss below whatever order block took out a short-term low below the 3rd drive, basically, which in this case I would just basically mark out this low. Okay, we took out that low right on this candle. So let's say initially I put my stop loss down here. Let's use the risk reward tool. Let's say I did want to buy here. I should really be putting my stop loss below the order block. that is outside of this range. And then once I get maybe this manipulation closure, I can then scale into the position with a tighter stop like that. But that's how I should have played that. But it worked out really nicely anyway. And I was very aggressive with the challenge, not the challenge, the competition account. Able to catch a nice win as well. Then in this area, you can see I've got the same thing marked out. Strong closure. I was buying in this area with a tight stop. That then has a failure swing and aggressive break down. So that's showing you bearishness. Then gets a failure swing, breaks down multiple times and sells off into the range. Initially, you can see I bought down here with a stop loss below the swing low. That failed and I got out. Multiple drive into the lows. Then finally coming down to precisely, I actually took this on this account as well. But a pretty nice entry if I may say so myself. 22.54 and the low is at 22.22. So very close to the lows. Then just had a limit sell set up at this short-term high to close that position out. I actually had a limit buy sitting just below this low, but came down to precisely classic 142. So the market on all assets just about, it constantly bounces between the 420s, like 42, 420s, XRP, USD. That's what happened yesterday on XRP. We have 420 being right up here. That's exactly where we went to. And if you look at just about any asset, it will constantly just find these levels and bounce between it. So 42, 420, 4.2, 0.42, like literally everything. So if you ever have a point of interest and one of those numbers are nearby, it can be a useful way to refine your entry to a specific price level. So yeah, that'll do for this video likely. One thing I will show you actually first is this. This is a prop firm tracker I made with collaborating with GPT, and it essentially allows me to log the trading day, the account number of what account I'm trading, the P&L, any notes for that day. It calculates if that meets the minimum valid threshold for a trading day on that account, and then brings up the current running P&L. We then have, for each account, we have a stats page that's kind of gamified, showing you what stage you're at, the progress towards your goals, the max risk per trade. You can adjust what you want to risk per trade. Like let's say I want to only risk, let's say I want to risk 2% per trade. And now it says, okay, well, planned risk per trade would actually be, okay, well, that's wrong. Uh, 0.2. Oh, I need to, maybe I just need the percent. 2%. Yeah, so 2%, and then it says, okay, it auto calculates the max risk per trade. But I'll change that back to 0.5% or 1. But yeah, and you can select what accounts you've got. So the account model, the phase that you're in, the phase 1 and phase 2 funded, active, or if it's archived. You then have an account template, so you can copy this for new accounts. And for each account, you can see that they haven't been doing that well. Lost them are down. And then we have the configuration, so we can actually set up the different references, like the reset time for the balance, add new accounts for the dropdown. We have a cockpit up here, which allows us to register new accounts, archive accounts, and if there are any errors, you can repair the formulas and things, which is essentially that. account templates. We then have an account index, just showing you an overview of the accounts. We have what session I'm planning on trading them on, the days since they were last traded, that help me keep track of that I'm trading them often enough so that they don't get cancelled on me. And then an overall view of my total equity and funded amount, goal, remaining to target. That needs formatting a bit better, but yeah, I thought it was a pretty cool way to track things and keep a better tabs on what I'm trying to do. Also create very simple rules for myself in regards to trading these accounts. This is something I heard on a podcast recently. This stood out to me is the idea of creating really simple rules and how you can get much better with your trading and risk management and your just everything. Can't think of the right word right now, but just by creating simple rules. Great example of that is saying that on this particular trade account, I'm risking maximum daily stop of 1.5%. That's a very easy rule. It's very simple, very easy rule. An example of a more complex rule would be something along the lines of, okay, between 7 a.m. and 8 a.m., I'm going to buy the first multi-candle displacement with a stop loss below the hourly candle low plus one 5-minute candle. There's another rule you can make for an account, and that can be how you're planning to trade the account, but it's a lot more complex. It's going to be a lot harder to follow and take a lot of more cognitive demands. So the idea is to create really simple rules around your trading. That's kind of why I've got these quest notes. I want to try and think of ways that I can, set up an account and go, okay, well, this account, I'm only going to trade it in the Asia session, or I'm risking this much per trade, or I'm only trading this very simple thing here. But try and make the rules as simple and basic as you can rather than complex. I think that's something that I want to start trying a bit more with. And that's why I've got these in here so I can write out what the actual plan is for each account. I haven't really done that just yet, but write the mission name or the quest notes, and that should actually pop up in the daily log, account index. So mission slash quest notes, this tells you what your goal is for this account, session you're trying to do it, and all that kind of stuff. But yeah, that's the kind of setup I've got here. If you are interested in using it, you can get ChatGPT to make you one, or I could possibly send this one as well and share it. Just let me know if you are interested. But yeah, I've been using it, as you can see, and although I have not been doing very well since I started using it, it is helping me to just really basically journal at the end of the day, just using the daily end P&L and keep track of it. And it does feel slightly gamified, which is a good way to keep track of accounts rather than just churning through accounts and blowing them. That'll do for this video for now. And yeah, see you in the next one.